Had another green day, but at what cost? It was a small green day, and today just was it was it was a strange day to say the least. So now let's show the executions. First, we start on ES. ES execution was not great, bro. It was really not great. Look at this. Entry right here, stop loss was about 7 points on ES. And I forgot the sizing, so this was a much bigger loss than I thought. It was 750. That was a big loss. So coming in on the NQ side, what did I do after that? After that, looking at the 5 minute chart, I took this long off this order block holding. Longing there, getting stopped out a little under the candle. Wick low, not a great stop out again. That's, how big is that? That is a 40 point loss, 45 point loss, 47 point loss. That is not good. Then after that trade, we took our last trade of the day, which was right here. Long position, I did not have a stop loss because I knew the sweep was going to be very minor because this 1030 candle, this body, is our 1030 candle. We ended up sweeping sell side here. That was like a slight SMT at this data wick. This was our CPI data. So this wick had got swept on NQ. That's why I mentioned it right here. It also got swept on ES. So after that, I was looking for a retrace into the range. From that, if the bias was bullish, which looking at our 30-minute PO3 until 10 a.m., right here, it's not bullish. And just including 10 a.m., we have our sweep off that 10 a.m. candle. I'm using the CISD. A better entry would be to enter at this time off of CE of this and the bodies in this 10 a.m. Like anywhere in this gap would be nice, but after, like in the distribution cycle, would be better because you'd be waiting less time in the trade. I ended up taking this to partial at CE right there, and then a partial just when we start pushing up past our 5 minutes. 5 minute fair value. I was expecting this to actually reject, but because we are just moving more volatilely, I was looking on the 3 and 2 minute to see if there's no more gaps. All right, so right here, the reason I chose this exit for the OTE was because one, it was around that time for distribution. If it was going to be bearish, it's going to run the opposite direction. And OTEs, if it's not going to be bullish, then this was our OTE retracement. That was our OTE for being bullish. It was not bullish. It just dumped off of that. So our 30-minute PO3 was not bullish. It was bearish. Off of that, we're retracing into a range. Keep in mind, we do have a 90-minute above. Let's get rid of that. Off of the 90-minute cycle above, we do not have any SMTs. I'm not even like paying attention to YM because it's just moving straight lower. So off of this SMT, we have no other SMTs except for the SMTF on the 2 minute. No, it's not even a 2 minute. So is it a 5 minute? SMTF. Well, the lowest possible risk entry that you can get in the 30-minute PO3 to move lower. And let's just go to regular trading hours because this shows even better. Because we had a lot of charting today. Let's just get rid of this. We've got our 90-minute. So we have our 90-minute, our 2-minute BPR. So if this BPR does not get tapped into, off of this we have our SMT with open. So that's our SMT with open, and we also have our 90-minute SMT. So we have two SMTs off of 50% of the range. We just swept London high. This is also 90-minute accumulation. Technically, it's not accumulation that's too important in the 90-minute, but it's the A high, and there's an SMT between that and ES where it's swept. So off of that, true market cycle open is obviously going to be where our CISD is. Just looking on the regular trading hours first, if we get rid of, or if we just show the quadrants too, you can see that retapping these quadrants I also used as a reason to exit because we're moving bearishly. So we didn't tap in this 2-minute BPR. see, we tapped into it there. That was first criteria for entry. Really, yeah, you wouldn't want to go higher than that. That's also like where it aligns on the quadrants of the new daily opening gap. So from there, if you got an entry here, I was actually looking at one, I was looking at this long position because we had this ES sweep between this candle and this candle. So I was looking to enter right, like, where was that sweep? Right there. Like right as this was pushing up, I was looking to enter. Stop right there at the low, but we have our long position reversed. But it's just not really what I wanted to look for because I didn't really think that 30-minute PO3 would open that high. And when it started running, and then I was rethinking my idea, and it was going to open that high. So that's why I took this entry off of this 5-minute tap, or this 5-minute order block, because I was looking for a fair value gap in there. It was on the 3-minute, and we closed relatively close to it. And on the 2 minutes, I liked how it was looking, so I entered there. And the difference between this, because we're moving bearishly, is the OTE retrace. So like I said, a bearish 30-minute PO3. We have a bearish OTE retrace to a premium, which is a higher move. So from that higher move in discount, we're going to move lower from there. So off that OTE, the entry for shorts continuation after 10:30 would be, since we had 10:30 candle open, manipulate down. We have, where's our OT on ES? Because this high didn't get taken out, and I was looking to sell when ES took that high, or around there, so it was kind of confusing to me that it didn't take that. But we have our OT retrace. And here it's high enough, it's above 50%, so there is reason to sell. Off of the SMT we have at open, I didn't even know that we had that, to be honest. I thought it was just the 90-minute, and then we were just rebalancing the 2-minute. But off of this SMT at open with regular trading hours, you can really see that where the top was for the 30-minute PO3 is going to continue for the rest of the day, because this is a continuation manipulation day. So off of that idea, if you were in for the 30-minute for the day and you somehow had the insight that it was going to be that kind of continuation day, then holding there, and for every retrace, you need to have your stop at around 80%. So if we put around 8.1, it would be around here. So really, you should be break even just barely above that high. Really inside, you should be break even at this 2-minute, like at this top of that 2-minute, because for retraces, especially in the 5-minute time frame to 15-minute time frame, if you want to catch, this is like a 400 point move. 325, it's probably going to be up to 500 points and probably more. So if you want to get in on this kind of trade where it's 30-minute continuation of the daily move, then you can't move your stop, because let's say you moved your stop in this range as well. Your stop still needs to be like barely moved from here to here. Like it's such small movements that you have to do at a time when you're trying to get a high time frame move, because the retrace can be really big. And that's why I use like 15-minute ranges. You would narrow your range down to this order block. So you wouldn't want like a retrace above this high. Stuff like that. That's what you're looking for to be in a safe trade. And then if you want to start partialing out when you're above like 200 points, then do that at every swing low and watch the 15-minute and the 5-minute mostly, because then you're getting into like 5-minute trading for the 90-minute cycle, which happens slower, but the precision is a lot finer on the wicks because it's moving off the 5-minute for the 15. So like we trade in the opposite direction, and we ended up getting around where our highest highs would be, which is kind of crazy. I really thought that our 10 a.m. was gonna open longer because YM was moving in the opposite direction, and then it started to reverse and they started to correlate. So I thought that we were gonna get a bullish move off of this. So I sold here because really this is all that it needed to get to, because I saw that the new daily opening gap was gonna reverse. So I played it safe. Exited there. For entry, on re-entry, I forgot to mention short. So if you shorted here, Any tap before the 5-minute inverses right here is great, because really we're just trading in this range and in the CISD of the 5-minute. And on the, if you look at true microcycle open, we're like barely coming back to these premium ranges, and we still have gaps here. Like we didn't, like I said, we didn't take out the buy side on ES, so there really is no reason to move higher. If we go to re-entry after that, I mean, it wasn't really much of a great criteria. We just tap CE and our 10 a.m. That's really it. I mean, nothing, no like SMT inside of that, no SMTF, I'm pretty sure. Yeah, 5-minute tap is all you could have took. Not a lot of entries for the, oh, wow, yeah, we're moving, oh my gosh. Like a trade in here, if you would have held, is up to 400 points by now. It's getting there. It's so close. So today was a continuation day. Not obvious to me, to be honest. What I was thinking, like A plus scenario, was we were going to move up here, manipulate higher, and then distribute down. Because we had true day open here, we had discount buy side here. And it was just like so close. It's so close to the internal range. But I'm looking at the new daily opening or new weekly opening gap now, and we're just like completely moving away from it. Like, yeah, like look on ES, we didn't even get a body outside of that. We barely got the wick outside of that. And NQ is just even more precise. We touched it with the wick. So new weekly, new daily opening gaps, I mentioned them before all the time. They're very precise. I mean, that was our high. That is the wick high. Like that is the point. That is the wick high. So like I said, keep on using those, pay attention to them. They're so important. They're like built into the market basically. You cannot have the market without these gaps. So that's it. Not a great trading day, but still we ended up with profit. We saw the cycles. Quickly go over them. XAMD for the 90-minute. That's why I was expecting the manipulation to be a true day open, you know, just a little bit higher, but ended up not playing out. And I was in distribution for this high to be taken. So if it was going to be taken before our distribution lower, when our two distribution high time frame cycles are aligning, right there would be the entry manipulation. I entered early, like I said. So manipulation moving to distribution was this move up that I traded. And off the microcycles, I mean, it was pretty simple. Just watching the true microcycle open. This could have been accumulation, manipulation at open. If you longed for the PO3, that would be the narrative. And distribution after that. And then expansion. Actually, now I'm looking at it, I think it is XAM. Yeah, because I was considering this to be M. So I'm wrong. It is AMDX. Which is funny because I thought it was AMDX from the open, and then I changed it to XAMD because I had to have some kind of alignment for this to happen. So we didn't take Asia low on ES right here. So I saw this as like an SMT from the previous Asia low. I know it's like not really something, so it's like it's this low. I thought we were just gonna reverse because sometimes, and recently we've done this like 3 days in a row. We've come really close within points to our discount liquidity and then reverse, but wasn't the case today. That means we're in bearish narrative, and you can see we're like shifting on the 4 hour now, and that is a really, yeah. So for our BPR, if this low gets taken and we move lower, we're definitely moving much lower from there, and that would be our probably high of the month here. So that's it for the video, just a recap and a little foresight of what's going to happen. We'll just have to keep reading price to ensure that we are right, or on the right side at the right time, because the timing is the most important part. So anyways, I will see you guys in the next video.